he has gotten a little bit of criticism leading up to this merger. When you look at, like I said, it's a merger of equals between these two businesses. And there was one, I guess, famous investor, Bill Ackman, came out and has criticized this deal as maybe not fully realizing the value that is inherent in United Technologies. He has said that there is a conglomerate discount on the shares, and then by merging with Raytheon, they're basically exchanging undervalued shares and giving Raytheon the benefit of that conglomerate discount. When you look at some of those criticisms of this merger from a valuation point of view for United Technologies, do you think Ackman has a point here, or do you think he's a little misguided with those criticisms?
Well, let's take a step back because, Ackman's been involved in the United Technologies side for a while, including pushing for a three-way split, maybe even more than a three-way split. But it never really gained traction because of the M&A that United Technologies was doing. They just finished the Rockwell Collins deal, which substantially grew the aerospace side, but they needed to get that deal closed and at least start to bring it in-house before they considered this. Ackman was very big on splitting up the three parts. That is happening. Now he's always been more interested in the aerospace side than the other two parts. And yes, as you say, his basic feeling now is that why with the aerospace side still suffering from the conglomerate discount, why are you pledging its shares now when in his mind, it's going to be much more powerful on its own. I don't necessarily buy his argument. For one, I think he's missing the fact that Raytheon isn't really getting a premium here either. This deal is not designed to give either side a premium. The idea of the deal is that the sum of the parts will make them stronger. Raytheon is valued at something like 11 times EBITDA in the deal. If it's a little wishy-washy because it's stock, but that's about where they are now. And there's a lot of benefits that Raytheon is bringing as well. Raytheon brings defense exposure, which is a different customer set, but it's United Technologies, for all of its scale, they are still subject to Boeing and Airbus, and they are still have to bow under pressure to Boeing and Airbus. Raytheon has a whole different customer in the U.S. government. That revenue diversity will help the company. And also, probably most important, and what Ackman seems to be conveniently missing out on is, or skipping over, is United Technologies. It's hard to say because the split's going on, but it looks like they are going to give the aerospace unit about $24 billion in debt. Raytheon, by comparison, has less than $3 billion in debt. Combining these two companies, you're going to have a much more pristine backlog. Much more pristine balance sheet. You are going to have the flexibility to return capital to shareholders. You're going to have the flexibility to invest in R&D. You're going to be able to do a lot more with this balance sheet by bringing the Raytheon side in. And that's really, really to United Technologies' benefit, because they were going to have not liquidity issues, but they were going to have a substantial debt burden on their own as the split goes out.
Right. I mean, just having those stable revenues from the defense side of the business, not being subject to, I guess, as much cyclicality as you'll see in the commercial airline space is a clear benefit, I think, for United Technology. I think one program, I've seen called out a few different places is the Pratt & Whitney geared turbofan engine and what that can mean for United Technologies moving forward. However, it's cost, $10 billion or more to develop over time. So there's clear opportunities for that part of the business to grow. However, it takes a lot of upfront investment for that to grow. When you look at this deal in the context of what it will do for that geared turbofan next generation Pratt & Whitney engine, what opportunities it might have for United Technologies to more comfortably reinvest in that part of the business, what new opportunities does Raytheon merger create there?
Well, for one thing, just to give you an idea of the size and the scale we're talking about, I saw a number: 60,000 engineers are coming together here. And there isn't a lot of overlap in the business. United Technologies doesn't make missiles, which Raytheon, you're probably best known for the Patriot system, the anti-missile system. They do a lot of that work. And, so there isn't a lot of direct overlap. But, for example, Pratt & Whitney is in a difficult development cycle right now. Raytheon does do work with engines of their own, missile engines. Hypersonics is one area where I think they can work together. There are more areas for potential collaboration than there are areas where there's going to be overlap and cut or combine. But the collaboration is important. You're bringing together a lot of people from related fields. And oh, by the way, Raytheon does have a $40 billion backlog that projects well out into the next decade as far as planning for leverage, planning for revenue, planning on keeping the balance sheet healthy. And that's something that is maybe not unique to the defense industry, but with the government as a customer and the government making by law spending plans 5-10 years out, there is a lot of predictability there that you can use when you're making investment decisions, which I think is very much underappreciated on the commercial side. But I think it will be to United Technologies' benefit.
Yeah, when you have that flexibility to think long term because you have more diversified revenues, I think always a good thing for a business, particularly one that can maybe suffer from some cyclicality as you go through the upgrade cycle and in commercial airlines, things like that.